Welcome. In today's video, we're going to talk about the 9 different types of commercial real estate lenders and some of the basic attributes of each. So if you're thinking about purchasing an investment property and you want to know some of your options in terms of financing, make sure you watch this video until the very end. For context, my name is Daniel with Skyfield Finance. We partner with entrepreneurial and institutional real estate investors to help you raise capital to purchase, refinance, rehab, and develop real estate. We've worked with hundreds of real estate investors across the country and have funded over 100 million investment property loans. So hopefully you guys find value in this video. The first type of investment property lender is going to be your agency lenders. Agency lenders are privately owned or publicly traded commercial mortgage banking firms that originate, underwrite, and fund real estate loans with their own capital or borrowed capital. They originate and fund these loans with the sole purpose of selling these loans back to one of the two government-sponsored agencies, either Fannie Mae or Freddie Mac. Agency lenders lend only on residential-related commercial properties such as multifamily homes, assisted living, senior housing, and student housings. Some examples of agency lenders are Brocadia, Greystone, and Walker & Dunlap. The second type of lender that most of you are familiar with is going to be your commercial banks. Commercial banks are federally or state-chartered depository institutions. There are basically 3 types of banks. The first is a commercial bank, the second is a savings bank, and the last are credit unions. Banks make commercial real estate loans using customer deposits that are FDIC insured up to $200,000. Banks make up about 30 to 40% of the loans that we do here at Skyfield Finance. Some examples of commercial banks include the popular Wells Fargo, Chase Bank, and Navy Federal Credit Union. The next and third type of lender is what is called a conduit lender. Conduit lenders fund loans using their own money or borrowed money from large commercial banks such as Bank of America, Citigroup, or Wells Fargo. These loans are then securitized. Simply put, securitization is the process of pooling together a bunch of commercial mortgages and then converting them into an individual commercial mortgage-backed security. A conduit lender is typically a Wall Street investment bank. Some examples of conduit lenders is going to be JP Morgan, Goldman Sachs, or Morgan Stanley. The fourth type of real estate lender is going to be credit companies. Credit companies are typically subsidiaries or finance divisions of large corporate investment grade companies. A good example of a credit company, although they have since refocused their efforts, is GE Capital. GE Capital is a division of GE or General Electric that makes institutional investment property loans. Credit companies have large balance sheets, and unlike banks, they lend money without the restrictions and oversight imposed by the government. And because of this, they can be a good option for institutional real estate investors. The fifth type of lender is going to be mortgage bankers. Mortgage banking firms typically fund loans using their own money or with money borrowed from a large line of credit from a commercial bank. They then sell those loans in most cases. And in most cases, they'll sell those loans to either a Wall Street investment bank or one of the government-sponsored agencies, Fannie Mae or Freddie Mac. Some examples of mortgage bankers are Slate Capital, Northmark, and CBRE, to name a few. Another type of lender is a Community Development Financial Institution, or CDFIs. CDFIs are financial institutions that provide financial services to low-income communities. These institutions are typically mission-driven and work to create economic opportunities and affordable housing. CDFIs can be commercial banks, credit unions, debt funds, or venture capital funds. Some examples of CDFIs are New Haven Bank, the Opportunity Finance Network, and the Royal Business Bank. The seventh type of commercial real estate lender is a life insurance company. Life insurance companies are a big source of commercial real estate loans. Insurance companies make loans using money they've collected from premiums, policies, annuities, and other financial products that they sell. Life insurance companies generally don't like taking on risk, so they only lend on Class A buildings in well-located properties in major metropolitan cities. Some examples of life insurance companies include Pacific Life, New York Life, and American Family Insurance. The eighth type of lender is a debt fund. Debt funds are typically institutionally backed capital that lend money to real estate buyers and current owners of real estate. Today, real estate debt funds take up a medium but growing size niche in the world of commercial real estate. At this time, Skyfield does about 40% of our loans with debt funds. After the financial crisis of '08 and the recent bank failures of Signature Bank, First Republic Bank, and Citizens Bank, debt funds have become very popular with real estate investors. Some examples of debt funds are Bloomfield Capital, Basis Investment Group, and Trevian Capital. The ninth and final type of lender is going to be private lenders. Private lenders are companies that raise capital by reaching out to individual investors through a process called syndication. Simply put, syndication is the method used to pool funds together to make individual loans. Private lenders are often referred to as hard money lenders because of their slightly higher interest rates. In some cases, private lenders can also be debt funds. After the financial crisis of '08 and the recent bank failures of Signature Bank, First Republic Bank, and Citizens Bank, private lenders and alternative lenders have become very popular in the real estate lending space. In fact, I'd say about 40 to 50% of the loans we do per month are with private lenders or debt funds. So if you're a real estate investor and you're looking to raise capital for your next deal, head over to the description and click the link below to book a call with one of our reps. Thank you for your time. Take care, guys. Bye-bye.